as y'all are aware, apartments are bought on terms and a lot shorter. This is not your 30-year buy and hold type of scenario. These loans come into maturity. They're really going to have to be well capitalized, or they're going to have a lot of equity, or they're going to be in trouble. Think of it about as a buying opportunity.
Do you want to take ownership of your financial future? Have the freedom to do what you want, when you want, and with whom you want? Welcome to the top, the Take Ownership Podcast, the ultimate destination for Black people who want to learn how to build wealth through multifamily investing. We believe that multifamily investing is one of the most powerful wealth building tools available to our community. Through our podcast, we demystify the world of real estate investing and show you how to use multifamily properties to create long-term passive income streams and build equity. Each episode features expert guests, real-world case studies, and practical tips tailored to Black investors. Whether you're just starting out in real estate investing or you're a seasoned pro, you'll find valuable insights and actionable advice that can help you achieve your financial goals. Join us on the Take Ownership Podcast and start taking ownership of your financial future today.
All right, fam. Welcome back to the Take Ownership Podcast. Today's a very, very excited episode. So as usual, it's me, DB. I'm here with my man, my ace boom. Jerome, what's going on, man?
What is good, DB? Pretty good, man. Everything's going well, man. How about you?
As usual, man. You know, as we were talking about a little bit earlier today, right now I got a few deals that I'm looking at. As usual, the market is looking a little crazy. But hopefully I can nail one of these things down and, take it down. So, fam, so as we started with our podcast, we told you that, every week we would try to bring in a guest, especially someone who's going to, come and shed some light on the whole multifamily or just real estate in general. Today, we're very excited to bring on a fella here who really needs no introduction, but
champ is here, as they say.
He's here, man. He's here. So I'm gonna let Jason introduce himself. Just give us a little bit background on himself. But Jason, let the folks know, man. Who are you? What do you do, man?
Yeah. Well, hey, thank y'all for having me, man. I love seeing this. So this is gonna be a fun conversation right here. I'm excited for it. Absolutely. But yeah, the name is Jason Stubblefield. I'll just give like a brief, 2 minutes, maybe less than that, about the intro to me. So I started in a single family, got into multifamily, bought my first apartment complex in 2016. Started with really just a beat up 34 unit that was 50% vacant, but was able to take that and really just sort of parlay and roll that into other deals. And so currently our portfolio is a little over 1,100 units, based all in the Southeast. So we've owned in Tennessee, Kentucky, Georgia. And right now we're really sort of starting to focus on the affordable housing space, which is a brand new can of worms for me, but it's a way that we're actually able to take the knowledge that I've gained over the years and sort of do it in a way that builds a sense of community. You know what I mean? So it's not just about dollars or cents, but we're really trying to do good by the community while we also earn a return as an investor. So that's the brief rundown, man. We can get into a little bit more detail as we have the discussion here this evening.
Absolutely, man. I love that, man. And we're gonna jump into it. You broke down a few things. We definitely want to come back and jump into it. But before I even move on, is usually what we do is we talk about some current events, and then we check out what's going on and ask the guests for their input on what's going on. So one of the articles that we were looking at actually came out of our Great Capital report, and basically they're talking about what's going on with mortgage-backed securities, and they're projecting that over 4 billion loans are going to be for the multifamily business, right, are going to be coming maturing in October, followed by another 4 billion in November. Yeah, give us your thought on that, man, because I know you got something out there for it.
Yeah. So this is going to be very interesting, considering where interest rates are right now and when those interest rates were initially purchased. So as y'all are aware, apartments are bought on terms and a lot shorter. This is not your 30-year buy and hold type of scenario. So as these loans come into maturity, they're really going to have to be well capitalized, or they're going to have a lot of equity, or they're going to be in trouble. And so I think of it about as a buying opportunity for those that are really in the space to sort of know what's coming. This is going to be a continued trend going up because we had historically low interest rates for years, where we're at 3 and 4 and 5%. And now those loans are maturing, having to come out and be renewed at 6 and 7%. And so if you're going from a 3% interest rate to a 7% interest rate, that's a completely different deal. So the shorter the time period, the more trouble they're going to be in. Meaning that if they just bought that deal 3 years ago and now it's rolling over, ouch. 4 or 5 years, ouch as well. And so that's going to be a interesting time to see what's going on. And it's really time to see how these deals operated, because if your operations are intact and you got cash flow, you may be able to roll over. But if you did not have conservative underwriting, it could be problems.
It's gonna be painful. Yeah.
I know I was listening to this podcast where this broker named Bob Knackle, he was saying that commercial real estate, I guess the market tends to be a battle between fear and greed. And I know you touched on some great issues on your webinar last week. I would definitely direct people to hit that up. And where you just discussed the fundamentals of real estate. I just wanted to see where do you think we are now in regards to that spectrum? Is it more fear or greed, or like what's your barometer for the market?
Yeah. So real estate goes in cycles, right? So I think the webinar you're referring to, I sort of covered some of the market cycles. So none of this is really new. Okay. So you have the part where we're sort of in recovery, right? Something bad is just happening in the economy, and then we come out of that. And then you get to the part where we're like in expansion mode. So in expansion mode, that's where you talk about greed comes in. And you get into expansion, and then we have what you call a phase where I think we are right now, which is stabilization, right? And so in stabilization, it's like buyers and sellers sort of meet equilibrium, right? It's neither one can really sort of get what they want, and then we sort of go into a recession, and that's when sellers aren't able to get the price that they want or that they need. And so where we are now is stability going into a recession. And I think that it's good if you could understand the real estate picture in its totality. You're not really shocked by anything that happened. You're just like, okay, now we're going into this phase of the market, right? So we talk about greed and fundamentals, those two sort of go away because, I would say they go away, but those two go hand in hand. So as people begin to see an expansion and people see more and more dollars, they start to go away from real estate fundamentals. So you may say, hey, one of our fundamentals, like we always want to buy for cash flow. As the market's in expansion, you start to think that you can increase rents maybe more than what you actually can. You start to say, well, this property is going to be worth more. It doesn't matter if I don't have as much cash flow, because a year from now, I'm going to be able to sell it and make all this money. So you leave away from the fundamentals and start getting more into the speculation, and that could be determined as greed, but you're trying to make numbers work. And that gets harder and harder to do as you get towards the top of the market. And then for those that get caught, you know, you're in bad deals.
Yeah.
Oh, my bad. Just real quick.
Go ahead, man.
Just a personal anecdote for everybody out there. Jason is our well, so many things. Definitely our guide and post and mentor. And like maybe last week, a couple weeks ago, I was in that fear and greed spectrum. I was like, man, I just got to get one done. And I was kind of losing sight of those fundamentals. And he just kind of coached me on, all right, you still want to be doing these things, these essential things, and what we got in the business for. So I appreciate your insight on that, man.
Definitely. Yeah, I mean, it's better to not do a deal than to do a bad deal.
Absolutely. I know, because I've done some deals where, you know, you're gonna live to regret it. You know, but part of it is also that learning experience, right? But you definitely don't want to learn on in big amounts.
Right.
You want to learn maybe on a smaller amounts and learn from that. The one thing I was going to touch on was pretty much what you know, pretty much just touched on there, Jerome, and it's about, you know, what Jason was talking about, which is the fundamentals. It happens, right? Because we get, for the past few years, we were going to that phase where it's similar to 2006. I bought my first house back in 2006. And I remember coming around to 2008 before the ultimate crash. You know, people were basically buying homes, and like a few months later, without doing any work, period, to it, right? So the house was worth, you know, 100,000 more, which is ridiculous. There's no such thing, right? There's no improvement. There was nothing done to it. It was all speculation. But when it seems like everybody is also buying, even some smart people get caught, right? They get caught in that moment. A lot of people got caught in that moment. Oh, well, it's fine. I'll do my, you know, I'll do this ridiculous bridge loan that's gonna, you know, with no interest cap, you know, just craziness. Because, you know, the person they bought it from just gained like 2 million from it. So they think, well, okay, I'm also going to make another 2 million in next year. And that stuff definitely compounds. And yeah, you got to get back to the fundamentals, man. So, but yeah, listen, just so we started, and you told us, you know, back in 2016 you started, and right now you're looking at well over 1,100. That's ridiculous. That's a large number. I mean, there are some people that would never sort of understand the scope, but you know, that number. So tell us, clearly something is working, right? So tell us why apartments, because it's working for you and you stayed in it. So why apartments?
Yeah, I mean, it really didn't start off that way. In the beginning, I was looking for something that would sustain me long term, right? So I had a career in software development, bought a few single family houses, and I was like, how do I scale this? You know what I mean? How do I actually get out of this software development? Because honestly, I wasn't that much into writing code every day. And it was something that I did, but I wasn't passionate about it or anything like that.
Gotcha.
But, you know, also just looking at 401ks and like long term, you're like, hey, what's my real plan, plan or path here, right? So after just a series of failed ventures, I won't even go into all of them right now, but I was mainly just doing stuff, trying to see how I could make some money. And when I ran into apartments, it's what made sense. For one, the cash flow was there. And then I learned that really just by sort of taking that computer science or mathematics background and just applying it to a spreadsheet I had. And what I noticed is that I can make more cash flow from a 4 unit than I could from a 2 unit, and more cash flow from an 8 unit than I could from a 4 unit. And so it was like, hey, this just works mathematically on cash flow. So I started there, but that's the first time I really had a plan that I felt like I could follow and actually be able to scale. Because as single family, there wasn't necessarily an exit on a buy and hold. You know what I mean? Like you have to either flip and hope that you don't get caught in the market downturn, and just you can always flip higher. But in apartments with the ability to increase the value, now I'm like, okay, this is something that I can repeat.
Was there ever a moment where you either had to or just had a mindset shift in your investments from single family or just the litany of things that you did before multifamily?
I would say that there was one moment where multifamily just made sense for me. And it was after, I mean, I probably spent years doing various things. And when I actually just thought about it, my initial plan was, hey, I'm gonna buy a 4-unit, and I'm gonna take that 4-unit, I'm gonna go to 8, and I'll take an 8, and I'll try to go to a 12 over refinancing. But I knew that if I could get to, you know, whatever that number was at the time, 12 units, 16 units, whatever it was, I was like, this is going to really be able to scale versus going to single family, trying to buy a house, go through the whole escrow closing process so I can pick up $300 a month, right? I was like, that's going to take way too long.
Gotcha.
Let me dig real quick into something that you just mentioned. And I think at least for those who don't really understand the difference between, you know, single family homes and multifamilies, you said something really important. You said ability to increase value, right? So with single family, for the most part, when people think of it, they just know that, oh, well, I bought my house back in 1990. It is now 2000 whatever. Therefore, there's some value in it, right? And then my uncle's house next door sold for 500. Therefore, mine is also probably 500. But that's not the same with multifamily. So can you just explain that a little bit as to what are you talking about when you say value?
Yeah. So that's you nailed it when it comes to single family, right? What did your neighbor sell for? And if your neighbor sold for 300,000 and you live across the street, you're somewhere around $300,000. The reason that I like multifamily is because it's not based off of someone's opinion about a neighborhood. It's actually based off numbers. So if you can buy a property and say it makes $10,000 a month, well, it's going to be evaluated based off of the income, that $10,000 a month. If you can then increase that to $12,000 a month, now you're able to increase the value in proportion to how much the income went up. So it's the best of both worlds, because not only do you benefit from that increased cash flow, you also benefit from the increased property valuation now that you bought it. And that's the beauty of commercial real estate that you don't get in a single family space.
Excellent. Yeah.
So what would you say, just in light of our audience, you know, we just kind of aiming to demystify who can invest in multifamily. So what would you say is some of your biggest challenges or setbacks, if you would call it that, in your journey?
How long we got, Greg? I've had several setbacks along this journey.
Give out the Cliff Note version. Yeah.
Yeah. I'll try to hit the biggest, probably like the top 3, and I got all of that on the first deal. I really sort of just went in and hopped in because I understood the fundamentals of the business. Things I learned. Biggest one is, just because someone tells you that they make a certain amount of money on a property doesn't mean that they actually make it. So like, owner will give you a rent roll. Owner will give you financial documents saying that they make this amount of money, and people lie. You know what I mean? Call it lying, or however you want to word it. But
embellishing
on my first deal, that's what I found to be true, and that's painful. Because I'm showing up month 1. I'm like, where's the rest of the money? You know, it's not here. So that's one thing. Also understanding, I was quickly introduced to the different world of commercial real estate because we had things like security deposits, right? There was several tenants that had done security deposits. When I bought that deal, I used like a residential real estate contract. There was no mention of what to do with security deposits. So as we got closer to closing, the seller was just like, oh yeah, this unit right here, I took their security deposit because they were late 1 month, and another security deposit, yeah, they owe me for some damages in the unit. And there was nothing that I could do, and I was like, okay, what I've been doing in real estate is really different than this. And then the third biggest thing that I learned is probably just business operations. So I went into it glass half full, really eager to make a difference in my life, and didn't really think out the business plan. So I didn't have a plan for when tenants left, right? I was going to rehab certain number of units, and then I was going to refinance and live happily ever after. And what happened is, before I could get those units renovated, a tenant would just skip, right? They would leave in the middle of the night, and I didn't have enough money to then be able to go in and fix up another unit to basically keep my occupancy the exact same. So that's just a few of the nuances that go off when you're dealing with apartments, and there's a ton more, but those were things that were, that was painful in the beginning.
Yeah, that sounds like it. It's funny you talk about the business aspect of it, because knowing what I know now, and I'll go into it a bit later, but knowing what I know now, that's one of the things that I love about multifamily, is that it is more of a business. So my approach to it is, I'm not going in this to just, do what you might see on HDTV, where it's like, oh yeah, I'm about to pick the nicest color. I could care less about the color. I'm like, what is this business about? What is it going to turn out? But the reality is, much of this knowledge is because of the experience that I've had now. And that's because of the training that I've received. So with that being said, like, what would you do, or maybe not, forget about what you would do. What would you recommend for someone who's starting out, so that they don't go through that same learning pain that you went through? Like, what would be a recommendation for that person?
Yeah, I mean, this is something that I picked up later, and it's like, here's the thing. I think most people who are real estate investors consider themselves to be smart and to be savvy, and they can accomplish things. At this point in my life, what I realized is I don't have the time to make the mistakes, right? And so in my first deal, I went at it by myself, and if someone outside of me had seen these things, they would have immediately identified them. But you don't know things that you
don't know what you don't know.
Aware of it, you don't know what you don't know, right? And so if you want a cheat code, right, it's really to find somebody who's done it, who's doing it, and then have them look over your shoulder. In the apartment business, if you really just look at how much money, I mean, for that first deal, this is just a scenario. It took me, I bought that deal in 2016. I did not exit that deal until 2021, 2022, something like that. So 4 years I was in that deal. For four or 5 years, I was in that deal.
Yeah.
I could have been out of that deal in 18 to 24 months, knowing what I was doing. Had I gone in, capitalized, had I financed it the right way, you know what I mean? And just if you look at the time, if you look at the money that was spent and the headache of it, it just makes sense to try to get someone on your side that can help you avoid those sort of blind spots in your plan, so that you can keep moving faster. And I think that more and more the economy is just sort of moving towards that.
Yeah, makes sense. Well, how would, just given the kind of current market conditions, how do you interact with, say, your investors now? Is it any different than previous? Do you think they're kind of freaking out, listening to the news and things like that?
Yeah, I mean, it's definitely challenging in all markets, right? So when the market is booming overall, right? Stock portfolios are higher, property valuations are higher, people feel like they have money. It's easier for people to want to go invest and put money in places. When there's talks of recessions, when there's talks of layoffs, people are really tighter with their funds, and a lot of people mainly just want to play it safe, right? So as someone who is an investor, talking to investors, you really have to make logical sense about why they should invest at this time. Gotcha. So it's not just saying, the fundamentals of this is real estate, but it's like, no, this is what we're doing in this market right now. This is what we're doing. This is how your capital is going to be protected right now. And it's challenging, you know what I mean? Because I think that relationships matter even more now. And then also the strength of your business plan and the ability to speak to what's happening right now, right? It's not a time to say we're not in a recession or real estate is great, right? It's really to say this is why this specific asset was chosen. This is why this one was not chosen. Here's why we feel good about it in this climate. And you know, deals are still happening, but it's going to take more work than it was, you know, when everyone's just throwing money all over the place.
Yeah.
Got you. I appreciate that authenticity.
Absolutely.
I think that's what drew me to be coached by you. And I think that's cool that you just upfront with your investors, even though they the star of the show and we need their money. It's like, hey, we still got to discuss these conversations.
So yeah, Jason. So one of the things that we want to do is, as Joel mentioned earlier, I tend to us to demystify the whole idea about who can buy apartments and who can invest in apartments, right? So we're trying to educate people on both sides, not just people who want to be actively investing, but also those who want to be passively investing as well. Because not everybody's going to want to do the things that we do, right? So if you are on the passive end, you're the person with the money and you want to be able to receive that mailbox money, as they say. Like, what would you do to vet out someone like me and Jerome, right? Or even yourself, for that matter?
Yeah. So I've invested passively in several syndications, and one of the things you look for in the beginning is a relationship. I mean, it's the most important thing, because I have to feel like this person is going to do right by me, right? And you want to be able to see some track record of success, right? Hopefully that you've done it, but at the end of the day, if I'm looking at anybody, it's like, how do I feel about that person? How do I feel about them? And can I trust them with my money, right?
Yeah.
So that's one. And then you sort of get into the nitty gritty of like the aspects of the deal. Does the deal make sense? And if you can have those two combined, where like, okay, you have a realistic business plan. I feel like I probably got a cheat code. This is what I do too. But if I look at a deal, I was like, okay, you all have a solid deal, or they're explaining it. Then it's like, okay, I trust you. I trust the deal. That makes sense. Let's go. With that, I mean, I love my passive investments, because I literally don't do anything, right? And the check comes, right? And also it's super nice when you get a refinance and that unexpected, and you're off living your life. So that's beautiful. Like, that's ultimate passive income. With that, on the active side, I know what goes on behind the scenes. So you really understand that, hey, to make that happen, especially when markets change and issues arise at properties, which they always do, people are providing you a good service for that, with returns that are really, really decent compared to what you could find like in a stock market or something else.
That's what's up.
Yeah.
Cool.
Bobby, I'll ask you maybe one of these last questions. So, as a newbie, right? Oftentimes you come into the space and it feels like, well, I know nothing, right? But I know that can be true, right? Because we all have some skills, whether you know it or not. So, knowing what you know now, what do you think a newbie actually brings to the table? Someone who's brand new to the field.
Yeah, aspirations and opportunity, right? And I think that's where newbies really shine at, because human nature, like, we always want to progress, right? When I did my first deal and it was a 34 unit, I was ecstatic to own the 34 unit, right? Now I'm not looking at any 34 units, right? Now I can't even really get excited about one. The person who's new, you have that, even no, it doesn't matter what it is, you're actually able to look at deals with another eye that a lot of investors, especially savvy investors that have been there, just aren't, right? And so, just quick numbers. My first deal, it wasn't a ton of money, right? It was a lot to me, but it was only $325,000, right? That property was beat up, 50% vacant. I exited it for just under $800,000, right? But no one who is really like savvy business person would take that deal. Whereas a newer investor could really use that as a stepping stone to take their career to wherever, and it's low hanging fruit. So I would say if you'll be willing to come in and learn, take your aspirations as a newer person, you could go out and quickly be able to make a name for yourself. Whereas some other people would just avoid those deals because there's no bias there for them.
Yeah. Yeah,
that's what's up, man.
I completely agree. I think one of the things that people underestimate is your ability to learn on the job, right? I know we sort of gotten away from this whole idea of like apprenticeship and things that you used to be able to do, right? Or generally speaking, you pick up trades, you apprentice with someone for a while, and you pick up some of these things. And I believe even multifamily to a degree is part of that, right? So to be able to enter even at a low end, like you were saying, while today you might look back at it and say, man, that thing was crap. Back then it was golden ticket. It was like the best goose egg you've ever seen,
Right.
and
Yep.
it taught you a whole bunch of lessons, right? So yeah, definitely.
Yeah, absolutely.
Destination.
Yeah,
That's
cool.
what's up. So just as we wrap up, Jason, this is the question we got to ask all our guests. What do you take ownership of?
That's a loaded question, Brad. I mean, I really I take ownership of everything, right? Obviously the apartments and the complexes, but when I say everything, I mean everything. If my day's not going right, I take ownership of that. If my properties aren't going right, I take ownership of that. If my relationships with my family, my wife, friends, I take ownership of that because I really do feel like that's one of the most empowering things you can do, right? Is to say I'm responsible for it, because when you put it in somebody else's hands, you have no control. It's on them. When you take control of it, now it's something that you can own, you can accept, and then you can change it for the better to make your life work out the way you want it to.
For sure.
Nice.
Man. Appreciate that.
Absolutely.
Words of wisdom.
Indeed. Yeah, so Jason, tell the folks how they can get in touch with you, man.
Yeah, so when it comes to multifamily, I mainly have two platforms. If anyone wants to check out, sort of see what we're doing in affordable houses place, you can go to Real Apartments. That's RILapartments.com. And then when it comes to training, I got a free Facebook group where I just share information. I'm usually doing a live once a week, and that Facebook group is called The Multifamily Code. So if you just Google that, I mean, I'm also on platforms. You just search Jason Stubblefield, but those are the main two ways to really get connected with me.
Cool. Yeah, and I'll drop all the links in the description and later on in the conversations. Yeah. What about you, Jerome? How can the folks get in touch with you, man?
Avian Ivory Capital, longest website name in the world. Check us out in the link, bookmark it, hit us up, please.
Cool. And of course, for me, you can hit me up. My email is at hello@corbincapital.com. And my website is just that as well, corbincapital.com. All that stuff will be dropped in there. So Jason, man, I really, really appreciate you stopping by. Like I said, in the beginning, a lot of folks don't understand, but to go from 0 to over 1,100 in less than 10-year span, that's you're doing your thing, man. That one of the things that stress on this podcast is that anyone can kind of get this started. And, you've definitely shown us that it is possible for anyone to get started. And especially in our community, oftentimes we lack on some of these ability to build wealth on our own. So really, really appreciate what you're putting out there and the content and the love that you're putting out there. Really appreciate it.
Yeah, hey, man, appreciate y'all, man. Y'all are doing the right things and taking the right steps. So I'm excited to see what's to come, man. I love it.
Sure. Cool.
All right, man. Appreciate you, brother.
Yes, sir. Till the next we meet again. Peace.
All right. Y'all have a good one.
All right, man.